They're estimated 9 million, 5.5 million. They're somewhere in that range of US people living outside the US. And more, we're seeing penalties that people are getting. You're seeing more things in the courts challenging some of the things that expats are having to go through with their filing requirements. It's a little ridiculous that to get this treatment, you have to give up your citizenship for life, which is a big deal. The US is actually probably the biggest tax haven in the world if you're not a citizen, because the way our rules are designed to attract foreign investment. A bill was introduced by Congress called the Residence-Based Taxation for Americans Abroad Act. Basically, this creates the opportunity for a citizen to become a non-resident of the US for tax purposes without having to give up their actual citizenship. If you're an American living abroad or an expat, you're going to want to listen to this video because this could have a very big impact on how you're taxed and your reporting requirements to the US going forward. If you're following the news related to expats, you'll remember that President-elect Trump came out during his campaign this time around and specifically called out that he was for eliminating the double taxation of Americans who live abroad. At least it's being spoken about on a very public stage, which before it was kind of operating more in the background, and that publicized the issue. One thing I'll say though is that it kind of miscalculates the issue in a way, because to me, double taxation is not really the issue. I mean, there are specific instances where double taxation can exist. You have things like the net investment income tax, which is going through some court systems now as to whether treaties can apply to help. You have double taxation on exit taxes. There's a number of things where double tax does exist, but in general, we have a foreign tax credit system and a foreign earned exclusion system where you can usually eliminate any double tax effects. It's not so much the double taxation that I see as a problem with my clients and in general with expats. It's more just the burdens in general for expats having to continue to file US forms. For one thing, it's extremely complicated and costly with tax preparation fees and getting advisors to basically have to look at both tax systems together. So it's expensive to operate. It also is very unclear in some cases. When you look at foreign pensions and foreign trusts, the IRS guidance isn't clear. Even if you want to do things correctly, you don't know what to do. So there's always this fear of an unintentional penalty that also affects your ability to invest accurately or appropriately abroad. The US may have some negative consequence of investing in foreign mutual funds outside the US. It hits this PFIC status. People living in their local country can't really invest properly because of the US tax consequences. And then, of course, there's FATCA, right? People have trouble setting up accounts in foreign countries just because they're Americans. To me, those are the big problems. It's more of just the operational aspect of having to continue to file as if you live in the US when you don't, more so than it is the double taxation. The point of this video is to point out that on December 18th, Congressman LaHood of Illinois actually put forth a bill to Congress to eliminate double taxation of citizens abroad. This specific bill is called Residence-Based Taxation for Americans Abroad Act. So that was put forth in December 18th, 2024. And so I just wanted to talk about the key elements of that proposal and expectations going forward for it. I think the first thing to point out is this is not really new. The American Citizens Abroad, which is a nonprofit organization, some of the other ones that do similar work, have been fighting for this resident or residency-based taxation for a long time. There was actually a bill that came out in 2018 by a congressman out of North Carolina. It was called the Tax Fairness for Americans Abroad Act. The reason I think this time's a little different is because it has a little bit more publicity, because Trump came out and said it on the campaign. And there's also more expats at this point. I mean, they're estimated, at one point I heard 9 million, then I heard 5.5 million. Anyway, they're somewhere in that range of US people living outside the US. And more, we're seeing with certain penalties that people are getting, you're seeing more things in the courts challenging some of the things that expats are having to go through with their filing requirements. So to me, I'm just seeing a lot more publicity, and I think that there's a lot of bipartisan support for making some changes. This bill that was proposed this month does a couple of things. The main thing is that there's an elective non-resident status for expats that live abroad. If you're familiar currently, with the foreign earned income exclusion under Section 911, there's a test called the bona fide residence test, which basically says that if you're a bona fide resident of a foreign country for an entire calendar year, then you can elect the foreign earned income exclusion based on your foreign source earned income. Basically, that just means it's a very technical test, but at the end of the day, it's looking at where do you actually live? Where is your tax home? So where are you working? And then also, where is your actual home? Look at your non-vocational or work-related ties, bank accounts. Where do you go to church? Where is your social organizations? Where's your family live? That sort of thing, to see, like, are you really living in the foreign country, or are you just there to work and it's more of a transitory thing and your family and belongings and everything are really back in the US? So if you meet that bona fide residence test, and a lot of people obviously already meet that and are claiming that under the foreign earned income exclusion, then you could elect non-resident treatment. And so what that means is that you're taxed now as a non-resident of the US, which is very logical. It's how basically every other country in the world works. Going forward, you're going to fall under the non-residency rules in the US. So you're going to be taxed on your US sourced income. Every piece of income has a different rule for being sourced, but basically income from US bank accounts, US dividends, things like that, coming from the US are going to be taxable. A US business that you're getting a K-1 from, that's going to be US sourced. If you're performing services or you're salaried outside the US, outside US investment, that's all going to be foreign sourced and not taxable in the US. So, that could have a huge impact. You're then filing a non-resident tax return. There's no controlled foreign corporations, foreign trusts, PFICs, all of those things that give everybody nightmares of how they have to file their US tax return. That goes away. There is a 5-year certification period. So it kind of piggybacks a little bit on the current exit tax rules. Right now, the only way you can get this treatment that they're proposing in this bill is to actually renounce your US citizenship. The goal here is, how can you become a non-resident for US tax purposes and still retain your US? It's a little ridiculous that to get this treatment, you have to give up your citizenship for life, which is a big deal. The exit tax rules require 5-year certification before you're eligible. The same would be for this elective non-resident status. So you have to prove that you've been filing accurate and complete tax returns for 5 years. So people that are outside the US and have never filed and they hear about this program, they're going to have to file 5 years of certification before they can be eligible for this non-resident treatment. And secondly, they have proposed what's called a departure tax, very similar to the exit tax. It actually piggybacks on the $2 million threshold under Section 877. If the value of your net worth is over $2 million, then you could have a departure tax or an exit tax or a transition tax. There's exceptions to that for people that are long-term expats or accidental Americans. Certainly, all of this is going to be up for debate. If we do get a rule on this, it can probably look very different than this proposal starts out as. The exceptions to that exit tax are basically people that have been living in this foreign country for a long time. Accidental Americans, that means somebody that was born abroad to American parents and became a U.S. citizen as a result, but really have no other tie to the U.S. So they're not going to be subject to the exit tax. Long-term expats wouldn't be. We have to define that a little bit, but I think the way it was defined is like 3 years. So if you can prove 3 years of bona fide residence in that country, you can avoid that. They're trying to create a way to non-resident status for keeping your citizenship. There needs to be some sort of departure tax to keep people from abusing this. So just moving outside the US and electing non-resident status right before a big sale of their company or something like that. They have to have some way of drawing a line between people that are actually living outside the US and aren't doing this to save on taxes, best tax system. You'd still have an FBAR filing requirement, the way I understand it. There's a user fee. So if you renounce your citizenship, it's like $2,500 to renounce your citizenship. So that fee would still apply for this elective non-resident status. I guess you'd pay it to the US government. So let's say you are able to elect non-resident status. What we need to look out for is, one, the estate tax rules in the US. So if you continue to hold assets in the US, right now, the estate tax exemption is like $13 million. Now that's set to sunset at the end of 25. If you're a non-resident, that number is only $60,000. If you elect this non-resident status, the way it's written now in this bill is that if you hold US assets and let's say you passed away and the value of those assets were more than $60,000, you're going to pay an estate tax on that. So there's going to be a lot of estate planning required for this non-resident treatment. And also, you know, there is more kind of on the other side of the coin is there's a lot of potential to invest back in the US. Because at the end of the day, the US is actually probably the biggest tax haven in the world if you're not a citizen, because the way our rules are designed to attract foreign investment. So as a non-resident, investing in the US is very beneficial, and there's a lot of ways to avoid having to pay any income tax in the US. If right now you're operating an LLC in the US and you're a citizen, you're paying tax to the US. But let's say it's a remote business, so you don't have any physical location in the US. If you leave the US, elect non-resident status, and invest in that LLC, we can likely get to a point where you're doing the same thing you were doing before, but as a non-resident, and now it's not taxable in the US, but you're still accessing the US market. My thought is that there is enough support for simplifying things for expats abroad. I doubt we get to a point where you can elect non-resident status. My thought is that they find ways to at least have some threshold requirements, like for foreign corporations, that there be some modified version of a Form 5471 to where it's not such a burden for smaller taxpayers. Right now, it's the same form, whether you're Google's subsidiary or a small individual with a small business. And the same with foreign trusts. I think there's a lot of possibility for things to get cleaned up. Although American Citizens Abroad has done a very good job and done a lot of research to figure out what that cost is currently, I still think there's a lot of holes there, and it's hard to figure it out exactly for some of the reasons I mentioned. I'm going to be keeping a very close eye on this. You do the same. Make sure you're following this so that you understand what could be changing in your world, and it could have an impact on the things you do financially. Hopefully, we see some changes from Congress to make things easier for expats and maybe even non-resident status. Thanks for tuning in, and we'll see you next time. Are you an American citizen living abroad? Then you need to watch this video, because there are some big things potentially happening in Congress that could change the way you're taxed in the US. On December 18th, 2024, a bill was introduced by Congress called the Residence-Based Taxation for Americans Abroad Act. Basically, this creates the opportunity for a citizen to become a non-resident of the US for tax purposes without having to give up their actual citizenship, which has been the case for a long time now, or forever, really. So there is this elective non-resident status, which could do away with all these annoying filings that you have to do, like foreign corporations, foreign trusts. It could be a big change.